All right, how is everyone doing today? Wonderful Friday. So, the first day of November, the last month of fall 2024, and we are trading at slightly above 70,000 on Bitcoin and almost all time high on gold. Wow. Could we really think about such prices last November? So let's have a look back. So last year, gold was trading at slightly above $2,000 per troy ounce, and Bitcoin was trading at, where was it trading? So yeah, 33,000. So inflation up 100% on Bitcoin, and inflation of 33, 35%, even maybe 40% on gold. Wow, quite interesting. How are you doing today, my dear traders? So my name is Thomas, and I will be replacing the speaker who was supposed to conduct today's stream. And I'm quite happy that they gave me this possibility, this opportunity, because sliding on averages is one of my favorite strategies. Because, well, to my mind, moving averages, and there is this very famous quote, but by one of like really cool and really smart people about from the trading world. And he said, his quote goes something like this: that moving averages have brought more money to traders all over the world than all other indicators combined. So I cannot really overestimate the importance of moving averages as a very strong indicator that basically tells us it kind of, well, I mean, if you look at Bitcoin, for example, here, so SMA 50, wow, like it does wonders on weekly time frame, on daily time frame. Miraculous indicator, and it shows like really like all these breakouts. I mean, you don't need anything else. You can simply build your trading strategy just on simple moving averages, and you can be like super profitable. But let's so hello, Mr. Yogesh, and so guys, anyone else who wants to ask me something, feel free to do so. I'm here to answer your questions. Um, so yeah, please do ask me anything that you want. And yeah, so today, as I said, the topic of today's stream is sliding on average. So let's open this strategy. So I need to go here. I need to click on the technical analysis tab, and I go here, add more tools, and I can simply start typing. So I don't even need to search for it. But if you want to like search it, you need to click here. You need to go to strategies, and here you need to scroll down a little bit, and you're going to find it. Here it is, sliding on averages. So sliding on averages, basically there is a quick tutorial here. It plays for about 1 minute and explains even less, 45 seconds. In 45 seconds, it basically explains the essence of this strategy. Now, sliding on averages, and I want to add this strategy. Why can't I add this strategy? The strategy is available. Okay, so I'm in the Forex mode. All right, so this strategy is available for fixed time, obviously. So let's go back to fixed time, slide on averages, and I press enable strategy. Here it is. All right, now what I'm going to do here is I wanna, for your convenience, I want to make these lines a little thicker, and so that they become slightly more noticeable for you, my dear traders watching it from the stream. So there is an interesting question here. So it goes like this, sir. you have traded very well and your positional trades are giving you excellent returns. How do you manage to do this? Well, the answer here is simple, and if you've been following my, my webinars, my streams, you might remember how every Monday I speak about trading ideas that appear on the market, and each Monday I basically share trading ideas with you. And I've been speaking about Bitcoin for, I would say I spoke a lot, especially here when it was trading around 16K, 20K, 25K. I basically, like, all this time I was kind of predicting. Yeah, I don't like to kind of brag about, like, positive trades, because not only positive trades, I also do have losing trades. But in this case, I was like kind of screaming it, like, every time. I was like, yeah, guys, pay attention to Bitcoin. It is like really, like, it's looking that it's trading on the bottom and it is about to rebound anytime soon. And here's what happened. And yeah, basically after that, it bounced upwards, and ever since then it went upwards. And of course, I spoke about gold all the time, 2000, and I was saying that on every dip, on every drop, you should buy gold, because you should open long positions on gold, because it is like uptrending. Of course, it never uptrends, like nothing uptrends or downtrends with just kind of like one like flat line inclined upwards. In fact, it's more of a like kind of goes up, goes down, goes up, goes down a little bit, like it fluctuates around this trajectory. But here is a very good example. And like gold, well, I mean, like, how does it happen? I open trades, and I keep those trades open for a long period of time. So I don't close my trades after I see the first profits. And that is a key difference between, I can say, profitable traders and not profitable traders, because profitable profitable traders on Forex, they tend to keep their winning trades for as long as they can. Whereas traders who don't normally have that, they don't really have that many profits, usually they in fact do the opposite thing, and instead of holding on to their winning positions, they in fact close their winning positions, but they hold on to their losing positions for as long as they can, until it finally kills their positions. But so let me let me now go to the main topic of today's stream. Before I speak, I've been speaking like for 10 minutes about these just introductory things. So in this strategy, so going back to our strategy, which is called sliding on averages, what we need to do is we need to catch, we need to identify a moment of time when these two moving averages, they cross. And once they have crossed, that is a basically a signal for a trade. All right. So, like in this example here, brass index. Unfortunately, not all assets are available to everyone. But since I have I have access to almost everything, to every asset on the platform, because I work for the company, and I enjoy this privilege, and I can trade, I can catch more signals. So what's about to happen on this brass index is we might see a crossing here. So it has not happened just yet, but I think it's about to happen. And once it does happen, then I will open a trade. I've already prepared to open a trade in the upwards direction. Now, if we look back in time, so for example here, 20 minutes ago, there was a crossing, and the yellow line crosses blue line in the downwards direction, and that was a signal for a down trade. And as we can see, well, basically, yes, the price went down and it was a profitable trade. but I want to find a live example here. So right now we are starting with 1 minute time frame, and then I think we might have time, we might be able to actually apply this strategy on smaller time frames, like 15 seconds and maybe even 5 seconds. So, but of course, if you start trading on smaller time frames, that basically, like, almost every time that reduces your chances of winning, because most of strategies, most of indicators, most patterns, they work so much better on higher time frames, because originally they were invented for longer time frames, like 1 day, 1 hour, 1 week. So if you look at those indicators on that 1 week time frame, well, like we did what we saw on Bitcoin, for example, you are going to notice how well they work. And of course, well, the main problem if you start trading with on smaller time frames is it creates a lot of market noise, and it is very difficult to trade inside that market noise because prices fluctuate up and down all the time. And yeah, so the problem is that maybe, for example, like here, the chart goes upwards, but within these candlesticks, you have just chart just kind of going everywhere, just being everywhere at the same time. Now, all right, my first trade here, it is a trade in the downwards direction on this halal market index. And the signal for opening, so why I opened this trade here, because the yellow line crosses here the blue line in the downwards direction. And it means, well, not really, I don't really want to go so much into detail about the, the mechanics of SMA, how this simple moving average indicator works. It just basically gives you the average arithmetic number for the past n candlesticks, so like 5 or 10 or 15 or 20. In our case, it's 4 and 60. So we don't really need to think, we don't really need to know all these things under the hood. We just need to know the signal. And the signal is, so this yellow line crosses the blue line in the downwards direction. And that is the signal for a down trade. All right. And in this strategy, now I have to basically go to the next index or the next asset, and I need to kind of check and search for a new signal. Okay, gold we can remove from the tabs. This one as well. So I don't see anything interesting in the near future. All right, here, Braz index, yep, no trades in the observable in the foreseeable future. But for example, here with I think it's called digital dragons index, we might have a crossing in the near future, in the upcoming weeks, upcoming minutes, not weeks of course, but minutes. All right. Hello guys, hello Akpak, how are you doing today? All right, let me reload the platform just to make sure that we don't have any kind of ping and it's not lagging behind. All right, I removed this one, and this is my trade here, halal markets, 30 seconds to go. Digital dragons, yes, something might pop up quite soon. Crypto, nothing, and commodity, nothing. So my hint before you start using this strategy with trading big money, I really suggest that you trade with small funds a little bit, like maybe $1, $2, things of that nature. And before you before you can actually decide whether this or that strategy is good for you and you want to keep it or you want to drop it. Well, my suggestion always is to open at least 50 trades according to this or that strategy. Because, all right, here is a signal, Cricket Composite Index. All right, let's try. So, as you can see, this yellow line was moving for a quite a long period of time. It was moving closer and closer and closer and closer and even closer to the blue line. So once they crossed, there was a downwards signal. Nice. One little nuance about this strategy is, of course, such crossings, they don't happen that often. So sometimes you really need to, well, with any other strategies, in fact, you need to be patient, of course, and that is the most difficult thing. That's what I've noticed from my years of trading and from my experience with traders, like talking to traders, attending some trading conferences, attending educational courses, working in that proprietary company, working for Olymp Trade. Well, so that's one of the most common problems that traders face is they cannot. Oh, should I already open the trade here? Yeah, USD CAD. I didn't notice this. USD CAD here. USD JPY. Oh, nice. USD JPY. Another signal. So once again, yellow line crosses blue line, and that is the signal. It is that simple. Now, another important point here which I want to make is many people, well, they ask me, so which time frame to use and which duration. So, in fact, you can use any time frame you want. You can trade with 10 minutes. You can search signals on 5-minute time frame. You can use 4-hour time frame, etc. But what changes, the essence, the overall concept, the overall principle of work of this strategy does not change from time frame to time frame. What changes usually is duration of trade. So of course, if you trade with 4-hour candlesticks, you need to be using duration of trades at least double this time frame. So at least 8 hours. At least 8 hours, maybe even 10, 12. It's difficult to say. You need to experiment with various time frames. So I have traded, I don't know how many years I've been trading. It's I do not want to tell this number. It's well over 10 years now, close to 12, 13 years I've been trading. Sometimes successful, sometimes not so successful, but overall I'm in profits. And I've developed my own strategies, my own principles of trading. And I usually follow, whenever I trade FTT mode, on FTT mode of trading, I usually use 1-minute time frame. And so 1-minute time frame and duration, I multiply it by 3. That is my average duration of trades. That is my principle. I kind of take the current time frame and then I'm kind of looking 3 candlesticks into the future. So, for example, in this case, I open a trade here. So 1, 2, 3. So 3 candlesticks. So this current candlestick plus 3 other candlesticks. All right. So we are winning. So okay. So today, lucky day. All trades so far, they have been closing with profit. Why is it? Okay, so another good question here. Why it's too difficult to be profitable in FTT rather than Forex? Well, the answer is simple. Because when you trade FTT mode of trading, when you trade FTT, so you can win. Yeah, I use this word win. You can make profit. You can be profitable. Your potential profit equals say 93% maximum, whereas your potential loss is 100%. So this ratio is not really in your favor. And at the same time, when you trade Forex, you can always have a very short, a relatively short stop loss. So for example, maybe, I don't know, like maybe $100, but your potential profit is unlimited. Like there is no limit. Sky is the limit, right? I have a few trades here on gold. I was risking maybe 2,000. Now I'm making 26,000 on this trade. And I mean something like this. I was risking $500 in this trade, and now my current profit is plus 17,000. Like it's 20 times my risk. And that is the key difference between FX and FTT. So that is why I usually consider, so we all tend to begin with, quick trades. All right, here is another trade, commodity composite index, a downwards trade, a downward signal. So yellow line crossing the blue line. All right. And guys, by the way, if you like this stream, do not forget to hit that like button and to subscribe to our channel if you haven't done so yet, so that you don't miss our upcoming streams, because we conduct weekly streams and we trade live, no video editing. It is all happening live, and you can learn from our mistakes, you can learn from our successes. So it's a very transparent and like really open, kind of like very transparent situation, like just beyond this glass walls. Like we don't hide anything, everything is in the open. And sometimes we have profitable streams, sometimes we have losing streams, and well, that is called markets. Because if we all knew how to trade like without any losing trades, then I would probably be living in Miami and just be flying my private jets in the morning, in the afternoon, in the evening, and so on and so forth. So trading it's not unicorns and rainbows. It is a quite bumpy road to success. Wow, beautiful signal here on Mekong index. Did I catch it? No, I missed it. Okay, see, it is nearly impossible to catch, to be there for every trading signal. So I missed this one, but this is just an example of a perfect signal. And once again, yeah, duration, so time frame 1 minute, duration of trades 3 minutes. All right, so here we go, Mekong index. Going next, so Munch index, Kahwa index. All right, it is not too late. So, when is the right time to open a trade according to the strategy? Well, sometimes, probably one of the best moments of time is when these two lines just cross, exactly in the moment of time when they cross. But most of the time, it is not late if you encounter a signal like this. So the crossing happened 1 or 2 candlesticks ago. So usually I consider that the signal is still good, even when 1 or 2 candlesticks have already passed. All right, so in this example, Asia Composite Index, we see we have 30 seconds left, 30 seconds to go. So we'll see whether this downtrend is strong enough to take the price down and into the profitable area for me. But there is this support level, and I think that is why the price is just not dropping, because this support level is actually quite strong. But we'll see. All right, 5 seconds to go. Almost. So maybe if you copied this signal, then you might have had a profit. And sometimes well, okay, so Astra Index is a winning trade. Nice. And I think it is not too late to open another signal, another trade, because as I said, the signal is still there. I still consider this to be an active signal because, well, it just happened 1 or 2 candlesticks ago. So the overall situation on the asset has not changed so much. So we can take advantage even of the next trade signal. All right, so this is quite confusing to me because we had two crossings. Now I would rather skip this one because just too many signals already. And that's always a very good piece of advice. So whenever in doubt, you can skip a signal. You don't have to trade every signal. If you feel that there is something suspicious and you just don't want to risk, it. So yeah, feel free to skip that signal. It's absolutely fine if you feel that there is something weird going on about this asset. Maybe some news coming up soon, maybe some unusual volatility, something else. So whenever you feel there is something wrong with that signal, so feel free to just basically skip that signal. All right, we are downtrending on this index, Nosantara, I think it's called. Nosantara Halal Index, and yes, we are downtrending, and there is a very good signal, very strong, very clear signal. Like there is no confusion about this signal. Absolutely, yeah. I mean this asset, yeah. I mean all previous signals that I see, most of the previous signals that I see on this asset, here, 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 here. Yes, I would say everywhere. Wow, it's only clean signals. Okay, so this signal is a little bit confusing because there was an up signal and then the price couldn't hold above this blue line and then immediately it dropped downwards, and it means that this signal was a kind of this confusing signal. But everything else is just well, yeah, it's clear signals. So some assets react, or some assets are more suitable. Some currency pairs are more suitable for this or that trading strategy. And I know traders who have their favorite assets. For example, some people love gold, others like USD JPY, Euro USD, others prefer Bitcoin. So every trader has its own or her own preferences, and that is the beauty of trading, because you can really okay. So US markets just are about to open in 15 seconds. So let's watch how this opening happens. So that is why I do not open a trade here, because of the volatility that is about to begin in 5, 4, 3, 2, 1, and boom, something like this. So there are certain things that come with experience. So according to the strategy, I was supposed to open a trade, an up trade, but I knew that we were just 10 or 15 seconds away from market open in the US, and I was expecting like this normal volatility in the first 5 to 10 minutes from the opening, from the market's opening. So that is why these first minutes, so 3:30 p.m. my local time, that is when the US markets open, and you don't want to sort of trade inside that too much volatility happening. And for example, we can see it with Nasdaq. So Nasdaq, wow, and this beautiful signal on this. All right, even though this asset is also started to accelerate towards opening of the US markets, but still that was enough for me for the trade to close with profit. All right. There are a few questions. Sorry, I missing some questions, sir. I have been trading for 4 years in Forex, but I'm unable to hold my positions and tend to exit the market with a small profit. As a result, how can I improve this? Well, probably the only way to do it is to train more using small trades. So everything in trading has to be done in this very gradual, in a very slow manner, because you need to well, it's all about, it all comes down to psychology of trading. So I mean, you can watch some materials on YouTube. You can talk to our specialists from the VIP department. If your current level is expert or advanced, you can request a consultation, a free consultation from our specialists through customer support department. And well, as I said, the main problem with holding positions is that naturally, whenever we see this, green profit, we just want to grab this profit because we are afraid that someone or something, like basically the market, is going to take this away from us. And unfortunately, there is no quick fix. There is no remedy for this, like a quick remedy. You can only work on this. You can work on your psychology over time. Over time, you're going to improve, but don't look at my numbers, don't look at my positions, because I have been trading for almost 13, 14 years. So I have walked a long path in this, in this business, in this activity. So you cannot compare yourself to me, or it's like I cannot compare myself to Mike Tyson. I took some boxing classes, but only for 2 years. All right, this is nothing compared to Mike Tyson or any other like serious sportsman. So that absolutely doesn't count. And of course, you start with small wins, and then you work on your strategy. So every time you make little gains, and then next time you kind of make this exercise to hold this position for 1 day, for 2 days, for 3 days. Maybe you can open 5 trades on one asset in the same amount, and then you just like open the keep the first trade for 1 day, and then you close the second one like on Tuesday, the third one on Wednesday, and so on and so forth. And that is because basically you need to teach yourself how to hold these positions, right? So we are not really talking about like how to gain most of profits. We need to work on your issue, and the current issue seems to be an inability to hold winning trades. So once you've learned how to hold trades, so basically it's winning trades, of course. Then then you start working on other issues in trading. So unfortunately, this trade closed with a loss. Was kind of okay. So there was still 60% of the time this asset spent in the negative area for me, and here is also a rebound. All right, it happens. So what you're gonna do? Sometimes markets are markets. All right. Let me see. There is another question. So, Thomas, for Forex, which kind of chart patterns you follow? Are those normally present on the internet? Yes, everything. I mean, like nowadays, everything is available on the net. All the materials, everything. I learned. I learned from various sources, but you can find all these main. I mean, like, look. Here's the deal. Like, you don't really need to know. Oh, wait a second. I saw some. I think I just saw a signal. Where was that? Did I miss it? Probably missed it. So what I wanted to say is that you really need just 5 or 10. You need to know just 5, 6, 7, maybe 10 maximum. All right, let's open one more trade here, and yeah. So how many patterns do you need to know? It all comes down to maybe 10 various patterns that exist, and there isn't much else you can think about. So you have levels of support and resistance, you have breakouts, breakdowns, you have doji, you have role reversal pattern when resistance turns into support and vice versa. And what else? You have this like breakouts, breakdowns. I said that. Overbought, oversold, head and shoulders, double top, triple top, double bottom, triple bottom. And I think that's it. So and then channels like corridors, flags. But basically, you just need to understand the overall principle of this flag formation or this cup and handle formation. It goes by different names. Like it's just a very limited number of patterns that you need to learn. Like it's not even like like dozens of patterns. It's just kind of less than 15 patterns, like probably 10, maybe 7. There are 7 most common patterns, and that is it. And then maybe you need to learn how simple moving averages work, the RSI indicator, the MACD, parabolic SAR, and that's it. Like just learn 15 principles. You need 1 month to learn all these patterns. And then the most difficult task, of course, is to master your psychology of trading. Yes, psychology of trading is the most the most difficult part of it all. You just need to spend a lot of time practicing, learning, and working on your trading skills, and then learn how to hold your positions for a long period of time. Unfortunately, I didn't notice that duration of trade was 5 minutes, and I used it, but it was supposed to be 3 minutes. Okay, so that's why it should have been a profitable trade here, but all right. Yeah, should have been 3 minutes here. Okay, and here as well. 1, 2, 3. Well, still that would have been a losing trade. So, anyways, I started off with a very good start with just 1, 2, 3, 4, 5, 6 winning trades, and then it was more 6 losing and 2 winning trades, and then yeah. All right, so it's a trading strategy, and sometimes you have more winning trades, and then it kind of turns into a more kind of like a red street instead of green street, and it's more difficult. Now, what I want to do towards the end of this stream is I really want to show you some how we can trade on smaller time frames, so 15 seconds. So maybe we'll be able to find some signals, and I want to use a different trading amount so that we don't confuse it with my previous. And I'll show you, so we might find some signals. All right, Asia Composite Index, so 45 seconds. And once again, I follow this very simple rule. All right, here's the signal. 15 seconds multiplied by 3, so 3 times the time frame. That is the duration. That's how I calculate, that's how I get duration of my trades. So 15 seconds multiplied by 3 equals 45 seconds. But of course, as I said, you can use 1 minute, you can use 2 minutes, you can use 30 seconds. Every trader has to find his or her working strategy, working pattern, working duration of trades. You cannot really copy. Well, I mean, like you can, of course you can, but sometimes people complain that I've heard it quite a few times already. People copy everything in my strategy, even duration of my trades, and then they say, "Wow, but I lose money," and I'm like, "All right, so then try something else." And then others, I've heard many opinions like this. People tell me, "Yeah, I took your strategy, I copied your strategy." But I don't like 3 minutes. I think 2 minutes work much better, or 5 minutes work much better for the duration of trades. And I was like, all right, it's up to you. The only way to kind of judge who is right or who is wrong is to see who makes money. So whose strategy is profitable. So if you are able to get those profitable results, then your strategy is good for the current market. If not, then, well, all right. So so far we have one profitable and one losing trade, and two more will be closing soon. So we are gonna see 15 seconds on Kahwa index. All right, and one more signal here, Munch index. Nice. Okay, so it's kind of 50-50 so far. Let's open a couple more trades right, there is a good question here. So, sir, how to identify strong trends? Which indicator indicate better trend, SMA or EMA? Which has more effective results? Well, I don't really see so much difference between SMA and EMA, which is simple moving average or exponential moving average. And to my mind, they all, I prefer SMA because more traders use SMA. It's just kind of like this common thing on the markets. But try for yourself. I cannot tell you which one, like in my reality. Okay, if you're talking about, because whenever you ask a trader which is better, SMA or EMA, RSI or the MACD, so this trader is going to tell you something from his or her own experience, because there is no such consensus in the trading world that SMA is better than the EMA or vice versa. It just doesn't work like that. So each trader has his or her own preferences and his or her patterns. So that's it. It's very individual. Yeah, that is the right word to say, individual. But the first question that you asked was about trends and how to identify strong trends. Now, strong trends are usually identified or can be found when you combine technical analysis with fundamental analysis. So a very good example, of course, is Bitcoin and gold. So gold and Bitcoin, perfect combinations of technical analysis. So technically here was a very good entry point because we were so much oversold. There was previous support level, previous resistance now turned support. From the technical point of view, everything was there. And then we know that, the ETF approval for Bitcoin and for Ethereum was coming. So, so many things were kind of suggesting that we are in the beginning of the next bull run. And you could read that on the news, on the media, and on the chart itself. And another example would be gold, of course, because on gold, it was like really, really, like you didn't really have to, it was as easy as like 2 + 2, right? So what was there? A breakout to new all-time highs. You just had to figure out that 2000 is a strong psychological level for gold. And then price breaks above, stays there for a few weeks, like maybe 2 months. It stayed there, and then finally there was a breakout. So flag, pattern, and you just needed maybe to read some news about how China was buying gold and how many other countries were also like purchasing gold because they wanted to diversify their risks. So that is how you identify strong trends. Now, strong trends, they don't appear like every month, but once it has appeared, it usually lasts for a few months and sometimes even a few years. So this trend on gold, it's been going on for almost 10 months now, maybe even more. And the trend on Bitcoin also from exactly 12 months ago it started. it lasted like this first phase from late October, November, December, January till March, like 5 months, and then this sideways trend, and maybe we are in the beginning of the next upwards trend, another bullish trend on gold on Bitcoin. So even if you missed the initial move here, maybe you've missed it, it's all right. You can join later. The party is not over. For example, with gold, maybe if you missed this part, this initial part, but you could join here at 2,300. There were so many opportunities to enter the trend. Now, here, I don't recommend buying gold. We need to wait for a pullback, like obviously, because it's just too much overbought. But then, once it drops maybe towards 2,700, towards 2,500 especially, that is when you really wanna start, to buy gold. All right, so I think I should be, yes, so guys, join my stream next Monday, and next Monday I will list those patterns, like say 5, 10, 15 maybe patterns. So we'll go through them together, and you will be able to write them down, and later on you'll be able to find them on charts and in your trading practice. All right, so thank you so much for your attention. I hope you enjoyed my trading, my talk about the markets, and I will see you next Monday. So my name is Thomas, and I will see you soon. Bye-bye.